All right, morning everybody. All right, let's get started. All right, we had US stocks that closed a little bit lower yesterday as US GDP growth numbers missed expectations. So that was the major cause for the initial sell-off. Ended up down about just under 8 points, which isn't that dramatic, as the number was quite a big miss. It grew by only 0.2% in the first quarter, missing expectations of 1%. Then we had West Texas Intermediate crude oil, which rose by more than 3% to settle around $33 a barrel. We had pending home sales, which rose by 1.1%, which is beating estimates of 1%. And then Time Warner closed high after reporting better than expected earnings with a quarterly profit of $1.19 per share, which was 10 cents above the estimate. And then, of course, we had the FOMC meeting, which obviously didn't raise rates, and they didn't really give any indication of when they would. So, not too much that the market could take out of that meeting. All right, Asia down across the board, following on from the US. We had Japan, which was the worst performer, at 2.5% down, after Bank of Japan announced that it will keep its monetary policy unchanged. We had the banks leading Aussie lower again, and Shanghai was traded slightly lower as banks continued to fall after reporting disappointing earnings on Wednesday. Tencent out of the Hang Seng was down 1.7%. Not 100% sure how that's going to affect Naspers. Naspers has definitely underperformed Tencent over the last few days, so not 100% sure if it's priced in, but I wouldn't expect that Naspers will be bid off the bat this morning. No corporate action to speak of. Key factors today, we had Japanese industrial production, which came out a little bit better than expected. SA money supply came out at 8 o'clock at 7.42%. And then at 5 to 10, we have employment numbers out of Germany. At 11 o'clock, we got CPI estimate out of Eurozone. And then 2 o'clock, we have the SA trade balance. 2:30, we have US personal spending and initial jobs claims. All right, let's have a look at the charts. We'll start off by having a look at the Aussie. You can see the Aussie recently broke out of this beautiful consolidation and had a steep pop. There's obviously a lot higher targets still to come, but we have pulled back, as you can see, over the last few days. I'd expect a little more of a pullback, and it would actually be quite welcome as an opportunity to buy. Possible levels to look to start buying. I think you want to see some strength first before you just go in blindly, but we've got the 20-day moving average coming up here just under 48,000, and then our neckline and the 50-day moving average probably coming in at around 47,300. So that would still be, I mean, if it's test the neckline, still another 1,000, just over 1,250 points away. The 20-day moving average is a little closer, which is around about 700 or 800 points away. So if we do get a pullback that far, I think it could be a good buying opportunity. All right, the first stock we're going to look at is Aspen. Aspen's one we've been covering over the last few days. As you probably know, forming this big head and shoulders. It's pretty clear cut. The shoulders are pretty much symmetrical. It doesn't get any clearer than this. Yesterday broke down that 370 level that we were looking at in the meeting yesterday, and actually didn't look back. It was just offered the whole day. So I would expect that, even though we are a little bit oversold in Aspen, I would expect that we could go a little bit lower in the short term, and then before we have any kind of pullback to retest this breakdown level. That'll be the interesting entry, whether we actually do go and follow through for the full target, which is significantly lower than this in Aspen. All right, CFR, a little bit messy, but if we look at this, almost a bit of a head and shoulders continuation pattern, but not all that fantastically set up. But a breakout nonetheless. We broke through that, call it 104.80 level. Pulled back a little bit yesterday. If we do get a retest, I would say 104.50, 104.70, around that level. If we get some strength off that level, it could be a good buying opportunity. I feel like, with recent CFR performance, we're probably looking to buy the dips now rather than sell the bounces as we were earlier on this year. If we look at breweries, let's jump into an hourly chart or a 30-minute chart here. Right. Okay, so breweries also breaking down from a little bit of a topping pattern here. Not all that clear cut, and I've actually found these ones a little bit this stock a little bit difficult to play. We had a big sell-off yesterday. It closed the day around 34.70. The height of this little pattern is about. No, I'm looking at in London. That's why I'm confused here. All right, so let's have a look at the JSE. Okay, there we go. That makes sense. All right, so you can see we've had a bit of a bear flag over the last, from the end of March for pretty much the whole of April, has been forming. It hasn't really been able to bounce. Then on the 27th, 28th, or 28th, it broke down out of this this bottom trend line, came back and retested it a few days later, and has now put in a low for the last few days. The height of this channel is reasonably significant. It's about 660. We're talking about 23 rand from the breakdown, which could target about 620 on breweries. So keep an eye on this one. There could be a little more downside in breweries to come over the next few days. And this next one's Omnia. Omnia's Mike posted on the Storm website and on Twitter. Not really one I follow that closely, but as you can see, a really clear head and shoulders continuation pattern. Broke below there yesterday, only just, but still closed below that 166 level. Quite a significant lower target, about $23 lower. So we could be looking at testing around about 143 on Omnia in the short term. So keep an eye out for that. If we hold this level for the next day or two, that could mean some more downside there. Next one we want to look at is Discovery. So Discovery has obviously been one that we've been wanting to buy the dips on. It's been unbelievably strong this year, and starting sort of the end of last year. So we basically, on any kind of pullback, we're looking for opportunities to buy. If you have a look here, you can see this 50-day moving average has been an unbelievable support for Discovery over this year. We've had 1, 2, 3, 4, 5 tests of this level, and it's held every single time. So the 50-day moving average comes in around 127. A reversal off that level could be a great buying opportunity in Discovery, so keep an eye on that one. And the last one I'm going to show is Mr. Price. So Mr. Price, I think yesterday we showed this trend line that we needed to hold. It closed pretty much right on that trend line. So keep an eye on this level. It could be a reasonably important level. If we do get a reversal off this level, then it could be a good buying opportunity. If we don't get a reversal off this level, then I'm guessing that our next level we're going to be looking at is probably close to this 200-day moving average, which is at 232 Rand. That's all for today, guys. Good luck.